Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, there's a couple chunks of ice there in the whole melt up scenario. Can the markets make it? Can they continue up to that 381 level? Let's take a look. If you're new to the channel, don't forget to drop us a like and subscribe to be notified every time we upload a new update. At the time of this recording, it is just after 1:30 a.m. Eastern Time on Monday night / Tuesday morning. Currently, the futures are up 5, so not a whole lot going on. If you've watched any of these videos lately, you've certainly heard us talk about this zigzag pattern that's been qualified for seemingly forever, and this whole melt-up scenario that kind of occurs this time of year with low volume, quite often low volatility, and the market tends to drift, never short a dull market. And the potential move up to that C-wave extension at 381. But in the intro, I said, there might be a couple chunks of ice here in the whole melt-up scenario. So here's what I was referring to. If you take a look here at this bar on the 9th, that technically represents a pivot point. If you're not familiar with pivot points, that's where you have a bar with a high. The next day you have a higher high, following by the third day with a lower high. And then it works the same inversely with lows on the downside. Now, quite often people use pivot points to draw trend lines, etc., but they can also be indicators of potential change of direction. Now, here's another pivot point here. So we rounded off a bit with that pivot point on the 9th yesterday as well. So does that mean we're done and we're ready to head back to the upside? We'll see. So the chunks of ice, one of the rounded top there with that pivot point, and then let's take a look at the DMI. Last recording we talked about how I was trying to show it a little bit of love, but since then the ADX is like, not so excited about this. On the positive side, if you're bullish along the market, the positive directional indicator did move up even on a day when we finished on the low. Now, another thing that I wanted to show you is an updated chart of this 210 yield spread. We looked at this a while back. At the time, it was 72 basis points. Now it's up to 77 basis points. That should be supportive of the market and specifically the financial sector. But when we look at the XLF, you can see it's kind of rolling over with the market and pretty ugly day there as well. Not really what you would expect with a continued climb in that 210 yield spread. In fact, to share this with you in our Tuesday night Trade Finder this week, our case study consideration. If you haven't attended a Trade Finder, we look at the market and we go through and look at case study considerations for potential trades. If you want to follow along, put them in your practice account, whatever. And this week we chose this strangle here from a triangle pattern you can see on Truist. Obviously in the financial, the old BB&T SunTrust, I think, were the two that merged together to form this. So this was our case study consideration for the week, with the strangle being a position where you don't care whether it breaks to the upside or the downside. So you don't pick a direction. You just need it to move. And move it did today, so a nice breakout there, but again, to the downside. So some things are not really jiving here. Usually when that happens in the market, it works itself out, and we'll have to wait and see how that plays out. Also in Trade Finder, we got asked to look at some commodities, and last week we looked at the metals, so let's go ahead and take a look at some soft commodities. So you can see here's a chart of cotton, the March contract. Real nice run in the wave 3. If we look at the DMI, you can see that it had a good solid support there to the end of October, and now it's finding support again with the two directional indicators separating and the ADX making a nice move. So it looks like maybe there's more room to run for copper. Another thing I wanted to point out, we just looked at that triangle in Truist. Here, there's triangles everywhere. It's one of our newer educational series that we have on the website as well, if you want to check it out at ewotrader.com. But this is just classic triangle stuff. Even though this isn't a large one, it broke out. You can see the clear breakout of the ascending triangle. Back, retrace the breakout, and off we go again. I mean, it doesn't get any more classic with corrective triangles than that example right there. So there's cotton, and look at this move in lumber. Again, if you've watched any of my videos, you know I don't like this vertical stuff. When things start to go vertical like that and get too far away from the 10-day moving average, no security in any time frame, gets too far away from the 10-day moving average. You knew I had to get that in there, right? So we're starting to get a bit overbought here in lumber. Maybe a move back to the downside is warranted here, or at least a pause. But that makes sense. I mean, here in Florida, it seems like they can't build houses fast enough. The housing market is amazing, and when you have the CEO of Toll Brothers come out and say, "Oh, this is the best housing market he's ever seen," maybe we're at a top when you start to hear things like that being played out. Not the same kind of charts going on in orange juice and sugar. You can see that we had, here's another triangle. So this is turning into triangle class. Didn't intend for it to work out that way, but they're everywhere. So you can see there was a triangle there in OJ and broke out, vertical breakout, consolidated, came back down, retraced to the breakout point. Again, happens all the time. Sugar, just kind of a rollover after an extended wave 5. Really nice run in that wave 5. And then we're moving back to the downside here. So not seeing the same kind of support for moves higher in orange juice and sugar as we were from cotton and lumber. Kind of interesting there. Also thought we would update the dollar. We looked at that again in the last recording as well, but today we kind of had a bit of a breakdown. Closed off with a low, but it looks like maybe that consolidation at the 61.8% extension is over, and maybe we're making that march down towards 89 in the dollar. So that's not super supportive of economic strength there. So again, we're seeing some dichotomies here in the market as far as where things may go from here. Also thought I would update this chart on the XME that we looked at in the last recording, because I talked about the DMI and how the ADX was getting to the upside, and it was showing that the strongest part of the move was over. It's in the last recording. Go watch it, and you can see why I like this indicator as a confirming indicator so much with Elliott wave. Nothing's happened since then. Since they gave that signal that the strongest part of the move was over, the XME has gone absolutely dead sideways. Also wanted to update you. We talked about this, and we had sent this out for our subscribers as an alert, and it was a 2-day alert. We returned 60% profit for our subscribers in just 2 days. But the interesting thing about this is it really didn't move much. They just juiced the premiums and the calls. And so we were able to close it off, take a 60% gain with very little movement out of the stock at all. Does that mean there's a big move to the upside coming? We should have stayed? Maybe. But you did get 60% in 2 days. You're going to take that and be happy and move on. Last but not least, the VIX. You can see here it looked like we were breaking below this area that had been a support around 2250. We did break below it, but we only got down to 20, and now we're back above it again. So it looked like on the VIX that we were going to come down, break down here, fill this gap. Didn't quite make it to fill the gap, and now we're back above that support area, support resistance area now at 22.5. We'll see how things play out. So where do you guys think gold and silver are going? I meant to ask you last week, so post a comment under the comments section. Let us know where you think gold and silver will be at the end of the first quarter 2021. By the way, while you're at it, don't forget to hit that like button. And if you'd like, hit subscribe. We notify you anytime we post anything. We really appreciate your viewership and your time. Hope you have a great week. Talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.